Good morning once again, my people. Thank you guys for tuning in. Yes, bringing you another one from YNA Network. You wanna all road lead to digital currency. What? This article is coming from the conversation, and author is there's no author, but it is published by the University of Calgary. And the Bank of Canada's own policy is the reason why inflation is so high. The Bank of Canada has raised interest rates again in an effort to quell inflation. The central bank raised its policy rate by 0.75% points on September 7th, bringing its benchmark overnight rate to 3.25%. Economists are expecting the central bank to raise it again before the end of the year, which is weird because I've always been saying this. Like, what's going to happen when wintertime comes? You know, most people do their shopping, and there's people who celebrate Christmas. That most businesses make a lot of money during the winter and Black Friday and all of them time out. So anyway, by now it's clear that the Bank of Canada did not anticipate the current rate of inflation. When inflation first started increasing last year, the central bank was slow to start tighten in monetary policy. Now that inflation is persistent, the Bank of Canada is making up for lost time by aggressively raising its policy rate to get the inflation back to a target. They always do that. Monetary policy has a delayed impact on the economy, meaning that a change in monetary policy today will affect the economy about 12 to 18 months from now. And that's what happens. If they change it today, you're not going to see no changes until after like 3 to 4 months. All those supply chain problems, high energy price, war from Ukraine, and labor shortage have exacerbated inflation. The unprecedented expansionary monetary policy by the Bank of Canada last year is an important source of high inflation we observe today. Check out the rate. Look at the chart. It breaks it down from 2016 to now, and as you can see how high this inflation is. Getting back on track, the goal of Canada's monetary policy, jointly determined by the Government of Canada and the Bank of Canada, is to keep the inflation rate within a range of 1 to 3%, with 2% being the most desirable rate. In early 2021, all key inflation indicators started to rise dramatically, and as of now are all well above the 2% inflation. No shit. The goal, the total consumer price index inflation rate was 8.1% in June 2022 and fell to 7.6% in July 2022, mostly because of a decline in gasoline prices. The core consumer price index inflation was also well above 5% in July. Inflation also rose in the United States, Europe, and United Kingdom, with annual inflation in these countries now running around 9%, and central banks flagrantly missing their inflation targets. That's high. At the onset of the COVID-19 pandemic in March 2020, the Bank of Canada rapidly lowered the policy rate to near zero and kept it there until 2022. Since then, the Bank of Canada has been steadily increasing the policy rate until the most recent hike. See, these people need to start listening to the citizens. How long now has the citizens been putting out documentary, making loud, calling out, telling to the government, letting them know inflation is on the way. Inflation is on the way. All we need is something catastrophic like COVID-19. That's it. And they knew this. And I think this is all a plan, man. This is my opinion anyway. According to the central bank, it could be years before the policy rate is back to normal levels. Currently, the Bank of Canada estimates that inflation will decrease to about 3% by the end of 2023 and return to the 2% target by the end of 2024. But this remains to be seen. In this regard, back in 2020, the bank was expecting the policy rate to remain at 3.25% until 2023, but it's now at 3.25% and rising. Really? This is all part of their scheme. And Bank of Canada, I say, you telling me these people do money every day. You telling me you didn't see this coming? Bank of Canada assets. In response to COVID-19 pandemic, the Bank of Canada introduced a large number of lending programs to use non-interest rate tools known as non-conventional monetary policy to provide liquidity to the financial markets and stimulate the economy. This led to an unprecedented increase in the Bank of Canada's balance sheet, with the central bank buying more than $500 billion of financial assets, primarily in form of Government of Canada securities. Before the pandemic, the Bank of Canada's holding of securities were about $100 billion. The expansion in the Bank of Canada's balance sheet led to a huge injection of liquidity in the financial system and led to an increase in the reserves that commercial banks have in their accounts with the Bank of Canada. In fact, these reserves increased by more than 1,500 times per COVID amount. Such increase in bank reserves are generally considered to be inflationary. Wow, dang. That's a lot of times. Restoring faith in the Bank of Canada. The Bank of Canada's recent aggressive monetary tightening will be transmitted to the real economy through higher interest rates and lower asset prices, including housing prices, and will most likely kill the post-COVID economic expansion. Really? Wow. So these guys are really serious about their 2030 goal. Is they're talking about we will own nothing. We'll own nothing and be happy. What? That's foolishness. With inflation seemingly out of control, central banks appear to be losing credibility. And they lost that long time ago now. Come on now. The public trusts central banks to protect the buying power of money, but the increasing cost of living is eroding this trust. The Bank of Canada and other central banks, including the Federal Reserve, the Europe Central Bank, and the Bank of England, are all desperately trying to fight inflation and restore their credibility. In Canada, this restoration has involved the unprecedented increase in the Bank of Canada's policy rate that have taken place since the beginning of the year. Curiously, other countries that are facing the same supply chain problems and higher energy prices as us are now struggling with inflation as high as ours. For example, the inflation rate in Switzerland is 3.4%, in Japan 2.3%, in China 2.4%. But why is it the case is another conversation entirely. So, yeah, we want to give a shout out to The Conversation for providing this article, and to Scott White, editor-in-chief, for this article here. You understand? So, yeah, man, and I want to also thank you guys for listening. Don't forget to like, share, subscribe. You don't have to hit that notification bell, but if you want to and you want these videos to be ready available for you, it'll be here for you whether or not you hit that notification bell. All right, just subscribe to the channel and the videos will be here for you. All right.